In this video, traders, we're going to look at futures, options, stocks, CFDs and spread bets. Which should you choose to get exposure, or as a vehicle to get exposure to the market you want? Because sometimes some of these aren't always available to you. Stay tuned. Hey traders, warm welcome to you. Thank you for joining me. All right, so you want to get exposure to a market or a selection of different markets across a selection of different sectors or different market types, and you're trying to figure out what's the best way to get exposure. Now, most people are going to say, okay, I can't use these for one way or another, or these are too expensive, or I don't have this account, or they don't offer that account in my jurisdiction or in my country. So let's look at everything and let's look at the pros and cons of using each of these ways of getting exposure to what you're want to get exposure to the market type you want to get exposure to. So some of the main things we've got, and I didn't add treasuries on here, guys, there's not many people. I don't feel many people are trading treasuries as much as they have done before. It used to be super popular, especially with day traders who will be actively trading the futures on the price ladder. But let's just go with the kind of broad things, guys. Stocks like Apple, Barclays, Tesla, Vodafone, Marks and Spencer. Look at UK and US stocks. Obviously, you've got European stocks as well, Deutsche Bank, etc. Indices, FTSE 100, S&P 500, Nasdaq, Dow. You know the score there. Commodities, super popular ones like gold, crude oil, natural gas to a lesser extent, and then some smaller soft commodities like cotton, maybe orange juice if you want to go crazy, coffee. The market numbers, market types are endless. And obviously, everyone's familiar with Forex, USD, JPY, Euro USD, etc. Don't go into all of those. Crypto, Bitcoin, Ethereum, you get the idea. And treasuries, of course, you know, we can trade. Germans are pretty popular. German treasuries are popular, as are the US, 5-10 years, etc. Anyway, you want to get exposure to these. What's the way of doing it? Now, one way you can do it, which is actually very popular with retail traders, is via a contract for difference. By the way, if you're looking for a new CFD provider, do check out our channel sponsor. I'll link to them in the description below. But that's a good way of getting exposure to many markets through one account. So you have one account, whatever CFD provider you're using, you have one account, and you can basically trade anything they offer a CFD in. A CFD is a contract for difference. Don't just go into details of that. That's one way of getting exposure. Now, spread bet, very similar to a CFD, and a lot of companies offer a spread bet and a CFD under the same platform. It's just wrapped in a different tax wrapper, so you don't get charged capital gains. Now, I know that they're not available in a lot of jurisdictions. I get that. So what are your other ways of doing it? So CFD is quite a relaxed way, cheap way, easy way to get exposure to many markets. However, if you want to get direct exposure, let's say you want to trade directly on the exchange. Now, from a setup perspective, very rarely do you really need direct access. Yes, it's slightly cheaper when you're doing volume, but most of the time, using a CFD or a spread bet, or when you've got a counterparty, use your broker rather than the exchange. For most types of trading, unless you're really money you're scalping, you have to be on the order book, is going to be sufficient for most of us. So put that to one side for now. But if you want to trade stocks, you're going to have to trade actual stock. You're going to have to buy the stock. Don't forget, the only issue you have when you're buying the stock is if you're buying actual shares in the UK, you have to pay stamp duty. And if you're day trading shares in the US or stocks in the US, you have to have at least $25,000 in your account to qualify for patent day trader status. And otherwise, you end up getting all sorts of mess. You've got less than that. You can only do a certain number of trades. I think it's like 3 over a week period. I can't remember what the actual number is. Someone can let me know in the comment section below, remind me of that one. But if you don't have enough money in your account, you aren't going to be able to day trade. So there's some limitations there. But other than that, if you want to trade stock, you have to look at options, because you go, okay, well, if I don't want to trade the stock, if I don't qualify for patent day trader status because I don't have 25,000, I can't trade CFD, you might have to look towards options. Now, options aren't obviously an exact replica of the stock. You're going to have to take some different viewpoints, and there's some time sensitivity, and there's some volatility component to it, and you have to understand how to trade options and pick the right options for the job. But in theory, you can almost trade the stock like using an option. You can pick the right option that hasn't got so much of a volatility component. You can pick different option strategies that mirror the movement of a stock, or you can kind of leverage yourself up and go, right, I want to use a small amount of capital, have a high risk reward ratio trade. There'll be a lower probability of success, but I can play that game. So options are one way to look at it, and you're going to have to need an options broker for that. So someone who offers options in the US markets, if you're looking for US stocks, etc. So what about indices? Now, if you're trading indices, CFDs, again, great way of doing it. Spread bets, again, great way of doing it. Super cheap, super liquid. That would be my preference if it was me. However, you can trade the futures contract directly on the exchange. Again, you need a separate broker for that. That would involve trading the futures contract, the specific contract, and each contract has different margin requirements. Each contract's in different currencies. Each contract has different tick sizes. So you have to make sure you do your homework before you start punting around on a futures contract. For example, silver and DAX, big contract, very high tick value, relatively speaking. And then you go back to something like Dow Jones Mini, which is a relatively small size contract. So you've got to know what contract you're trading so that it's suitable for what you need. But that would be your direct way of getting exposure if you didn't have ability to trade CFDs or spread bet. Commodities, same thing, they're trading on futures. There's slight difference. Some other slight difference to mention, guys. You're trading futures. They are based in months. So you've got front month, far months, etc., and they roll over. So you have to trade the most liquid contract. Again, it's not really a video to go deep into this. It's just something you've got to be aware of if you're trading futures directly on the exchange. Really easy to open a brokerage account if you're doing this. You want to trade directly on the exchange. Again, the margin requirements are set by the exchange. Some brokers will offer you a day trade margin. In other words, if you're trading intraday and you're flat at the close, they will say, hey, instead of having to put out the required margin for the exchange to hold that futures contract position overnight, we'll allow you to put $500 up or whatever it is. So worth looking at if that's the sort of thing you want. Now, Forex. You can trade futures on Forex. Not that popular because it doesn't seem like the most sensible. Some people do like to trade it for whatever reasons they've got, but you can trade FX very, very cheaply, very, very easily via CFD, via spread bet. If you have to go to a spot provider, and fine, just be very careful about who you're picking, make sure they're regulated, all that kind of stuff, because there's a lot of very shady FX firms out there. But FX is super, super cheap, and you've got super loads of options to trade that. Talking about options, if you want to trade options, most of the time the options are going to be on the futures contract. The official options are. However, some CFD providers, some other brokers will offer a kind of option, synthetic option if you like, on the spot price of the currency pair that you want to get exposure to. One other thing to mention, guys, if you want to get exposure to let's say gold and oil and some of the other you can sort of get exposure to some of these. You can get exposure to the dollar, for example, via an ETF, which would be covered under your stock account. So if you've got a brokerage account you can trade stocks with, you can trade an ETF, for example SPY, which would track the S&P 500, acts just like a stock. You can trade the dollar index, which is kind of a basket of stocks, a basket of currency pairs weighted against the dollar. You can play around with it. So there's some commodity ETF as well. So trading stocks does give you exposure if you want to a big swathe of other type of markets. They're just wrapped up into an ETF. Same with bonds as well. So that could be an option for you. You could go, okay, well, you know what? If I haven't got I can't trade CFDs. I can't spread bet. If I open a stock account and I can at least cover all the stocks, the major indices via ETFs, the major commodities via an ETF, the bonds, I can cover pretty much all I need using a stock account. So that's something to definitely consider. And of course, crypto, guys. If you want to buy the actual crypto, you've got to have your wallet and all other kind of stuff. Don't just go into full details about that. But if you want to do that, you have to do it that way. If you're trading, if you've got a CFD account or a spread bet account, many of the companies will offer a CFD or a spread bet against the cryptocurrency you want to trade. So if you want to trade Bitcoin, Ethereum, they'll offer you a price and it's just wrapped up as a CFD or a spread bet, and it just tracks the underlying, whatever exchange they choose to track it again. So those are some of your options, guys. If you don't have I think that CFDs and spread bets are probably the best vehicle for most retail traders if you can have access to it. Second best, probably stocks. Go and open a stock account, because then at least you can trade the ETF if you want access to S&P 500, QQQ if you want access NASDAQ, a TLT for the bonds, USO for crude oil, GLD for gold, go on, etc. Loads of ETFs to get access. So you can still get exposure. Obviously then going on to futures if you want to get just direct exposure to the futures contract. Now, one final thing, guys, if you're trading ETF, the advantage is you can trade 1 share, 2 shares, 3 shares, 50 shares, 1,000 shares, whereas a futures contract, the minimum you can trade is 1 contract, and that might be, for a smaller account, too much. Anyways, those are some of the things to think about if you're choosing or trying to choose a vehicle to get exposure to the market you want. Take care. I'll see you next one. Bye bye.